They should have. Well, I think it's like 150, $150 to get free shipping. So I don't know if I can get free shipping. Yeah, so we're gonna get started here. So we got yeah. Just go to Tom. So yeah, guys, if you guys want any food drinks, QR codes, just scan it. And just like if you want, yeah, just pull it out. All right. Well, cool. This is one more intimate groups I think that we've had here. So last time we were like packed to the gills in this group. There was like no room. So yeah. So anyway, everybody, welcome. Last time we talked about crypto was in November. And just so you can see what that price chart looks like, I love looking at it. That was like the exact day we did our crypto meetup was right when FTX had happened, right? So that's when there was a big drop in the market, you know, from obviously a lot of people unfortunately losing their crypto. And you can see, you know, what has gone on since then. Of course, our government is pretty corrupt, in my opinion. Really not doing anything to protect the consumer. Didn't do anything with FTX, and now they're going after actually good people in the space, like Coinbase and Binance and other different crypto companies, right? They're like, I hate to call them currencies, they're just companies, right? These are companies, they've all got a board of advisors, marketers, all that stuff. There's no difference. The technology that they back is obviously just different. So anyway, so that was kind of the last time that we met. So now we're 6 months down the road. I was definitely at this point saying, you know, buy Bitcoin for sure. And I mean, I think you're up, it's come down slightly, but we're kind of getting a good entry point right here, which is good. I think we're up like what, 65% since then. So, which is pretty good. So wanted to kind of cover some of the forces at work. So, obviously since 1970, we went off the gold standard, cash has become a liability. Okay. So it's not an asset. That's why people who save their money, it's because of the completely wrong way to go, right? Like if you're just constantly stacking cash and you don't acquire assets, you're going to get killed. So it really does suck that our government did that way back when, because it just hurts, you know, little people who, or, you know, let's say low income people who can't acquire assets, right? Or they don't even like think about that and understand how the monetary system like really works. So as you can see from the charts, government debt ever since the financial crisis in 2008 just completely took on a new level, right? So what they realized is to keep the system going, to keep the way of the financial system as it is, they had to debase the currency. Okay, they had to slowly erode away the value for things to keep climbing and keep going up. And the problem with that is when you've got, you know, one piece of real estate or one piece of gold compared to the rich man's 10 or the big corporation's 100, now the wealth gap just gets insane, right? So, and obviously there's all kinds of different info on why the wealth gap exists. It exists because of this. It exists because of government debt and what they do to the monetary system. Okay. So I kind of like the reason why I've also started this group. I've really dug deep on just the inner workings of things like this, right? And so I kind of realized, especially after COVID, that a lot of people are at a disadvantage. They need to know about it and kind of know how to position themselves, right? Especially at a time like now, with what we're going through, because there's going to be a lot of changes. If you're not on the right side of that change, you're going to get hurt. So that's kind of the greater monetary force at work. Obviously, I think like what back in 2008 to get us out of the hole, we printed like 800 billion, just to kind of bottom it and inject a little bit of money into the economy. Now we're injecting obviously 4, 5, 6, 8 trillion, right? So now it's just like you can see that money, that debt is just getting exponential, as you can see by the curve. Of course, linked right to 1970. So that's kind of one of the bigger things that you need to be aware of is to pay off that debt, they need to either spend less, which they're not going to do, or tax more, which they're trying to do a little bit, but it's never going to be enough. So what is the third option and the sneaky, sly option is debase the currency, is print money and make that paper worth less. Because it's just easier to do, right? You don't have, no one's got to vote on it. You don't have to tax the people because you don't have to tax them more. It is a hidden tax, but you don't have to quote take their money. You can take it kind of silently. So, and then obviously you can see from ever since that time when we've been getting debasement, right? This is the S&P 500. What's happened since then? That asset has just gone parabolic with the money supply, right? So you can clearly see it in all kinds of different things. That's why they say we're in the everything bubble. Real estate, there's everything. A lot of things seem like they're in a bubble, but again, they have chose debasement. They will keep going that way. Things will go higher from here because the money printing has not stopped. It's not going to stop. So, yeah, so that's kind of just one thing to keep in mind. So now, why is crypto so powerful, and why is it good as a technology to hold and to have? Well, in a world of bank failures, right, with SVB and First Republic, and by the way, all the banks that have failed now, it's already bigger than what happened in 2008. So doesn't seem like it because it's they're trying to sweep it under the rug a little bit, make it seem like it's not as bad. The volume and the amount of losses is already way bigger than 2008. So, which is pretty crazy. But in a world of bank failures and bank crises, and people are obviously scared of their money and where they keep it, with crypto, you can completely store it on the blockchains where only you have access to it. And what that means, there's kind of a little image right here. So the red image to the left, that would be like a hot wallet. So a hot wallet is like a wallet on your phone. Well, your phone's still connected to the internet, right? So somehow, some way, a hacker could get in there and steal your funds. Potentially, it doesn't happen often, but it can happen. With a cold wallet, it's a very common feature in cybersecurity to air gap yourself from the internet, right? What air gapping means is there's no connection. So that's what a cold wallet does. So I personally own a cold wallet. So when you hold it there, you connect it for a second. If you need to send out, not in, you can always receive in. And then once you're done, you just disconnect it, you're good. So that keeps you air gapped from the internet. And again, that's a common cybersecurity feature. That's kind of the main difference. And your crypto is actually stored on the blockchain itself, right? So that's the one big reason why governments are freaking out and trying to regulate it, because they do not like that. Okay, so like let's say if they had to seize your money, well, they can't. You've got it. It's like having a coin in your pocket. They would physically, but it's even better because even if they physically came near you, they go, okay, cool, what do you got? Like you'd have to get my passcode, you'd have to have me, access this for you to even get near it. So yeah, that's the model that I've got is Ledger. Yeah, so there's Ledger, there's Trezor, there's a bunch of different brands out there, but those are kind of the two main ones, is Ledger and Trezor. So that's definitely a huge benefit, is being able to hold your own asset. And it's definitely going to be, I mean, what we've seen with the banks, like recently, over the next like coming years, you're going to see way more of that. Because there's been a big kind of what they essentially do is they lend out money they don't have, right? And once they go BK, once something happens, like what happened recently, leverage, popped in the system, then they're sitting there naked, right? They're sitting there completely exposed. That's kind of how the banks work. They lend out money they don't have, and as long as cash is coming in, they're good. But then when it doesn't happen, problems get exposed. So, of course, JP Morgan got, a sweetheart deal on overtaking First Republic. They basically got paid 13 billion to, take them on. So, we're bailing out the banks again. So anyway, self-custody is super important, and it's also, a big advantage to you. They're much faster, much more efficient for payment systems. If you want to send a wire, you got to make sure the bank's open. You got to tell them all this info. You got to pay the fee. Sometimes you have to go down there. Now some more are better about, doing it from your laptop at home. But it's just cumbersome, right? Like if you don't do it by, 1:59 p.m., because of the East Coast, West Coast time, he's got to wait till tomorrow. With crypto, you send it in an instant. You can send it anywhere in the world, 24/7, 365. It happens all the time, right? So, interesting enough, SVB was actually fairly solvent as a bank, but they had their own kind of payment system as well that worked 24/7. So what is happening with the SEC and the government cracking down, any crypto that really is as superior as a payment system, those are the ones they're going after. Like Solana, they basically claim them to be a security. You can send things for a fraction of a cent. I mean, like, it's insane how cheap it is. So, and it's not to say that they're not like operating, they're still operating as usual. So we'll see what comes about with the SEC, quote, crackdown. 24/7 operation, we already talked about that. Decentralization. So decentralization is definitely a big thing. So there's no any one key point of failure. Like with Bitcoin, I mean, there's miners all over the world that validate and run that network. So, I mean, you literally have to have every single miner in the entire world get shut off at the same time for there to be any kind of issue. It's not going to happen, right? There's miners that run on solar farms. There's miners that run on nuclear technology, hydro energy. So no matter what happens, pretty much that network's always going to be, going, right? So basically there's no like central hub, like let's say like a data center or something like that, where if that goes offline, then that network's done, right? So decentralization is a big aspect and big advantage of cryptocurrency, and as well as transparency. So, they're going to, tell you that, oh, yeah, crypto's funding, what they say recently, crypto's funding, like the drug trafficking, space and all that stuff. Well, it's completely transparent. It was, quote, hard to see and hard to validate transactions before and see where things are going. But now with a lot of data analytics companies, it's completely transparent, right? Who's got kind of what wallet and where it's going. The reason why that's good is because, with like bookkeeping or financial institutions, or let's say even when you're buying a piece of real estate, if they want to validate your proof of funds, any of that stuff, be like, hey, here it is, completely recorded. I can't fake this. It's on the blockchain. Here you go, right? So transparency is definitely a big advantage. So, and then real quick, what are some of the concerns that you guys have with the space? I kind of want to hear. I'm kind of curious. Yeah, no, for sure. SEC not playing ball is definitely a concern for sure. The one, yeah, yeah. The one thing I would say to that is, the United States is not the only place that has money and capital for investing. So, like, let's say if they completely make it inaccessible to anyone in the U.S. to do, there's still a lot of people all around the world that can still invest in that same asset. So, like, China is very like pro crypto friendly, as well as Dubai, Singapore, a lot of different nations with lots of wealth. So the way I see it, they can do what they're going to do. It may slow down the inevitable, but it's still gonna, take off as a technology. So
So, like, I think the key concern that many people have is inflation. You mentioned
right.
inflation in the US dollar.
Yep.
So, is crypto not correlated?
Well, the big thing is you want to see crypto as an investment, right? And the reason why it's going to have price appreciation is because you're going from an ever expanding group going into that asset, right? So I'm sure you guys have seen like Kathy Woods value Bitcoin at $1 million per coin. The way she gets there is actually pretty, actually very, very plausible and very easy, good way of looking at it. If you take the amount of money that's in the gold space, the precious metal space, right? Because that's why those people hold that asset, is to maintain their purchasing power, right? That's the main reason, to hedge against that debasement. So the amount of money that's in gold, I wish I had the dollar figure off the top of my head globally. If that money went into Bitcoin, we'd be at $1 million of Bitcoin. And there's like a tiny, tiny fraction of the world's wealth in gold and silver. So, which I think will definitely eventually happen. I mean, a lot of people speculate by, 2030. If you just kind of look at the price action and look at a lot of the different, charts on how they get there, I'll kind of jump a little bit ahead just because it ties into what we're talking about. But basically, this is like the Bitcoin price cycle. It's, definitely respected this. We're definitely at that low. I think this was made in like, what was it? It was made in June of last year. So, I mean, we're probably up in this band a little bit, right? That, not that bottom blue, but that next color up, since we popped up a little bit. But essentially, that's kind of what it does. And this is a logarithmic chart. So basically, logarithmic is kind of exponential, right? If you look at the actual price growth without log, it's just like, it's kind of hard to fathom and hard to watch. When you look at it in a logarithmic chart, it makes a lot more sense, and you can kind of follow the price action and see what it's doing. But basically, it's a network effect, right? It's like a bell curve. Initially, a small amount of people know about it. Then it's kind of pre-masses, a little bit more people know about it. Now more people are rushing in. Now the masses get in, and it's kind of at its peak, right? So that's kind of what we're doing, is we're following that bell curve, and it's still really, really early. Like obviously not everyone uses, Bitcoin, or not everyone even holds it. I mean, I would suggest you hold it and just don't sell it. Some people do use it as a payment system, and it works great. Of course, like, countries like El Salvador and, there's definitely going to be more people using it as a currency. Like Vietnam and different developing nations are using crypto the most because their currencies are so unstable, right? Because the US dollar is basically a big weapon against the rest of the world. So anyway, so that's kind of the price history and that adoption, right? It's all about the network adoption. So back to your question, it's going to do better than inflation because of that network effect. Demand. Yep. Yep. Right. Exactly. Cool. So yeah, and then feel free to throw stuff out, guys. This is kind of like an open format type thing. So it's kind of interesting. In the past like 6 months, like even me, like I've watched thousands and still continue to this day to watch thousands of hours of interviews with experts in the space. I really highly encourage you to go look at Kathy Wood's channel, Ark Invest. They put out really good content on their YouTube channel. I regularly look at like technical analysis stuff. You can go to Figure Out Money if you want all technical analysis and learn how to analyze charts. We'll look at some of that later. I've got various different sources for what I want to look at, but I've really kind of boiled it down to the people that I really, really like and honestly kind of give the most punch for listening to them. But Kathy Woods has a really good channel. Yeah. Well, that, not only that, there's also a lack of good collateral. So the way that banks work is when they are constantly like lending money and moving money around, they need collateral, because what they'll do is they'll say, hey, I have this T-bill, and a T-bill is good collateral because it pays you a small dividend, right? So it's better than cash. Cash is a liability to them. Hey, I'll lend you this T-bill, and then you give me cash in return. Well, there's a huge lack of good collateral in the banking system, and Bitcoin's actually a really, really good replacement for collateral. So because you can move it and send it around, because it's fully recorded on the blockchain, who has it. What they do with the banks is basically they'll lend that same collateral, like 6, 7 different times, right? So there's only one asset, but there's 7 IOUs in the system. So anytime that, exactly what happened, anytime they go, ooh, hey, I need that collateral now. If they all do that, then they're like, oh shit, there's no actual collateral there because someone went bankrupt with it, and now we're stuck. So that's a big problem. So it's called rehypothecation is what they do when they move that collateral around like that. And it's not good. So, so in the past year, I've been kind of thinking, okay, like when's the adoption coming? Like when are you gonna really start seeing it in the mainstream? And it's starting to happen, which is really, really cool. So Tezos is a blockchain, of course, and the California DMV is going to use it for moving around titles of vehicles. So, governments have to get more efficient. They're horrible. I mean, if you guys have ever gone through a permitting process with, a house or any kind of permit process for a building, it's ridiculous. It takes forever. I mean, especially, through COVID, they're all working from home and they're like literally not doing anything. Like it's crazy. So governments have to get more efficient. Their systems are completely ancient. It just doesn't work. It's painfully obvious. So it's actually a really great thing that they're going to start doing some things like this and start looking to blockchain to integrate it. So lots of different countries, lots of different countries have already started looking at different blockchains for various different services. So this is super cool right here, our home state, using Tezos for transferring titles. And again, the reason is it's completely recorded. They don't have to do much paperwork because all those transfers, it's easy to go back and look at it, right? Okay, and then here's a Argentinian airline that's using NFTs for ticketing. So if you guys have ever been scammed or know someone who's been scammed with a ticket, once they use NFTs, that's completely impossible. Like you won't be able to do it because you'll know if that ticket is actually real and the actual real NFT ticket because it's its own individual special little token, right? So eventually ticketing, title and deeds for real estate. Obviously it's already happening with vehicle titles, all of those like unique things. It's all going to be NFTs. So, and then of course you're seeing, different celebrities kind of make like their own NFT releases or, like movie tickets could be like an NFT and, oh, hey, it's a collector's item. Like once you're done, there's a whole other side for that. But, for, I'd say very kind of like baby steps use cases, here it is. It's already starting to happen. I wish I knew the blockchain that they're using, but they very well may have their own system. Chainlink's been partnered with Swift. So if you guys don't know, Swift is basically the global payments network across the world right now. Chainlink's been partnered with them since I think like mid last year, or even like start of 22. So they've been partnered with them for a while. And essentially this is, Swift with a ton of global banks, Chainlink's involved. It's a lot of players involved with that. So I am personally a holder of Chainlink. We'll go look at the chart of Chainlink later. And you can kind of see they're very, very active. One thing I do like about them, they're super active as a project. They are constantly posting to their YouTube. I think every year they do like a hackathon to try and, break and, well, not break, but expose the weaknesses of Chainlink, make it better. So they are definitely a good project that I like a lot because they have a significant use case. So they kind of show a model of how they will like operate with financial institutions. You guys can kind of go look at that a little bit later. Did want to show this video. Let's see. I have to replay this. Let me see if I can get this a little bit louder. Yeah. Okay, yeah, I guess that's true. All right, so let this play. Yeah, so one thing to note is, so when they say Oracle, Chainlink is an Oracle. So essentially what it does is it takes data from different data points and it brings it to different blockchains. So it's called Chainlink for a reason. It also links different blockchains. So they're all kind of synonymous and maybe like reporting the same data type thing. So, and then their nearest competitor is like a 20th the size of them. It's like they're not even close. And they have tons of partnerships with a bunch of different companies. So, yeah, they're definitely going to do really well, in my opinion. Not financial advice, but would definitely suggest you look into them. As far as what he was talking about with like tokenizing, financial assets across the globe. So the way that stocks are settled, they settle every single day at the end of the day. And it's been like that forever. So if you do it on the blockchain with whatever network they choose, it happens in an instant. You know where that stock, where that share got traded to, who's now ownership of it. One thing that hedge funds are allowed to do, they kind of get slaps on the wrist now and then, but nowhere near the amount of times that they should, is when they go naked short. So I don't know if you guys remember, but during 2020, the AMC thing, one of the hedge funds, gosh, I forget the names. There was like 3 of them, but they were all naked short. What naked short means is you're actually buying more shares that's even available in that stock, which obviously we can't do. None of us could do that, but okay, these guys can, right? Because of financial derivatives. So that's one thing that will be, a net positive, basically. That's just one small example, is because if you got these amount of shares and they're being tracked by the blockchain, you can't go naked short. You can't buy more shares than are available because it's all being like instantly recorded in real time, right? So eventually, obviously stocks, bonds, real estate, a lot of, you're seeing syndication real estate, that's tokenization, right? So if you're just breaking that big apartment building or big commercial building into, a lot of different shares, that's tokenization. So real estate's going to get tokenized, art's going to get tokenized, all kinds of different things are going to get tokenized. So that's all going to get done through crypto. So what does kind of the macroeconomic picture look like? So Raoul Pal, you can kind of see his name there in the top right. So I've watched tons of his videos. He's got a channel, a couple channels actually on YouTube called Real Vision Finance. So they have, their free information, free education, and they've also got kind of, if you want to go deeper and basically get the interviews early, they kind of post those same interviews, months later. But they've got a paid education to, walk you guys through some different things. But he's, been in finance his whole life, worked for Goldman Sachs for a long time. But anyway, he's got this, now education that he puts out there all the time. He's got multiple different companies, but that's kind of what he's most known for. So this is some of his stuff that I get from his newsletter. This is actually on LinkedIn, actually, this particular one. That's why you can see the comments to the right. But what we're showing here is we're showing global M2. Okay, so global M2 is money and liquidity that floats around the world, right? The ups and downs is the rate of change. Okay, so when it's going down, you're seeing outflows. When it's going up, you're seeing inflows. So what you can see is global M2 or global liquidity and the Bitcoin price are directly correlated, like 100%. Right. So remember when 2017 happened, the huge, massive Bitcoin run up, right? You can see it just goes completely off the chart right here. Well, global M2 is doing the same thing. And then you can see they just hand in hand follow each other. So the cool thing is a lot of people have been kind of spooked. And if you, I mean, just listen to some people talk about the yield curve, right? So the yield curve is definitely a big warning sign in the financial system. So a lot of people are not invested in the financial markets right now because of things like the yield curve or just, data coming out as far as the economy slowing. But really now the biggest thing, the thing that really drives the whole system now is global liquidity, right? So right here, this is more isolated. So you can see back in October. So if you go look at stocks like Nvidia, Ethereum bottomed in October. There's a lot of different assets that bottomed in October. And the reason why is because liquidity was flowing back into the system. So it's pretty cool. I mean, Raoul calls it the everything formula. You can look at a lot of different markers and a lot of different charts, and basically you put probabilities to it. But according to and I definitely see it. According to him, and after watching him for a long time and seeing these data points, that is the biggest determination, the biggest factor. So liquidity has bottomed. Obviously the Federal Reserve is kind of peaked out on raising rates. They're still being very tight with the money that, they are putting into the economy, but China is injecting money. There's other global central banks around the world that are still, funneling money into the system. So yeah, and then here's just kind of like a forecasting that they put together on where liquidity is going to go. So the white line is actual liquidity right now, and the blue is kind of a forecast forward-looking measure of what liquidity is going to be like. And the way I see it, let me pull up another chart as well. So I always show the futures rates. Okay, here we go. So, and now when you see that, it makes a lot of sense when you look at things like this. Okay, so this is the federal futures, or I'm sorry, Fed rate fund futures. So this is what the Federal Reserve is more than likely going to do, right? It's all probabilities. But what happens here is there's money on the line. People are buyers and sellers betting on what these rates are going to do in a big giant market. So because of that, because there's money on the line, these are actually really, really accurate. So all these different lines are different dates. They've all adjusted with different economic data coming in. So as whatever, jobs comes in, CPI comes in, it adjusts, right? So each time it's been getting lower and lower, which is good. So now as of 5.5, we probably have another update now that I probably need to go fetch, but we're at the lowest point we've been. So if you're looking to refi some of your properties, 2025 is the year you want to do it, right? Because we're going to be at another ultimate low before we kind of cycle back up a little bit coming into 26. Okay. So, but when you look, that rates are going to go down for the next couple of years. That would make sense why we're going to see liquidity get flown back into the system, right? Or why it's already kind of forecasting that. So yeah, I love looking at this. Again, it's highly accurate because it's not opinionated. There's money on the line. If they were wrong, then they would, obviously lose, substantial amount of money. So things can happen, but it won't change wildly is the big picture. So this is good to see. Again, you can sign up for Raoul's newsletter if you go to his Twitter. I think it's free for now, but it may be paid at some point. Okay. Yeah, so let's go back to the Bitcoin chart. So now we're going to kind of dive in and say, okay, we know what the macro picture is looking like a little bit, and I could go on for days, guys. So I'm trying to, kind of go over as much as I can in an hour. So I'm kind of, walking you through kind of the highlights, right? The main points. So now let's look at the price action. We've kind of gone through the macroeconomic picture. Generally, why is crypto good as a technology? Why do you want to look for different things? Because cash is a complete liability. So let's see like where they're at. Are they cheap? Are they expensive? What's going on here? So yeah, you're good.
Yeah.
So yes, Bitcoin is definitely cheap. So to go back to, where we were at, I was pounding the table here in November, the last time we had our crypto meetup. And if you guys remember, our older gentleman in the back, he was, basically saying like, oh, there's no way, how do you know it's going to do good? And like prior performance doesn't mean, future performance. And he's, I tease him a little bit because this was right then. If he would have bought then, he'd be up 70%, from now. So Bitcoin definitely bottomed. I think it would have bottomed, here in more so October, right? October was right here when liquidity was kind of hit that bottom, but FTX happened right after. And because FTX happened, obviously that was a huge, blow to anyone who had crypto holdings and stuff like that. So unfortunately, that was just, something that happened at that time. But you can see it obviously recovered and made that ground up. So, but the biggest thing there is, don't let it in FTX happen to you. Be smart with your crypto, buy a cold storage wallet, be smart about it, and, hold your own private keys. So definitely do some research if you don't know how the cold storage works and what the private keys mean. There's a lot of different YouTubes that'll walk you through it. So yeah, so Bitcoin is still cheap. I mean, really, you can see that we're kind of tagging this wick back where we were at like 25,000. We're kind of coming into the blue line here, which is the 200-day moving average. So that's a good support line for price action. Anything above the 200-day is generally bullish. Anything below is kind of bearish. But if you kind of layer in, the biggest thing with this is why people get burned, right? They get oversized and they don't layer in. So if they got $10,000 or 1,000 or whatever, beginners are inclined to just throw it in all at once, right? No. You got to break it up because you're never going to catch the exact bottom and you're never going to sell the exact top. So you need to layer in and say, okay, I'm putting in a little bit here, a little bit here, a little bit here, and always try to catch the red, right? Don't be buying the green as much as you can. It goes against your psychology, and that's why trading is like a big psychological thing. But that's what you want to try and do is layer in and then layer out when you're ready to sell.
What is change?
I like Kraken the best. It's got really, really low fees. Coinbase is, they've got a lot higher fees than Kraken. It's like a fraction of a percent when you use Kraken, and they're the second biggest exchange. So yeah. What's that? Well, you can use Coinbase. Everyone knows Coinbase. I hold their stock. I think they're going to do really well, but yeah, it's like 3%. Yeah, right. Yeah. I mean, for some people who maybe you just want ease of use, it maybe so that's good for them. So now let's kind of look at Ethereum, right? So Ethereum, we're kind of coming into this big trend line. So you can see it's been kind of respecting that price action. So I think right now is a good time to be looking at accumulating. And again, right, like if I had $1,000, I'm going to say, okay, there's a pretty high probability that it's going to want to bounce from here. But just in case it doesn't, I'm going to throw 500 into it, right? So I'm going to say, okay, let's put 500 in now. Let's watch what it does. If it breaks down, the next spot it's going to want to come to is like this 421, because you can see it's a big level there because it came in so quickly and hit so quickly off. That means it's a big support level. Okay. And there's different indicators. If you don't want to, look for these support levels yourself, there's indicators where it automatically finds it for you. Red is supply, which means there's sellers. Blue is demand, which means there's buyers. Right. So I think we got good support here. I would put in $500. If it comes down here, I would put in another 250. And then if it keeps going lower, I would put in my last 250, bringing it to kind of this average bottom range, right? And now I didn't go from here all the way down here. My basis is more in the middle, right? So again, layering in, layering out. You're not gonna have to worry about layering out for like the next 2 years, so don't worry about that. Pick something if you want something very, very safe, Bitcoin, Ethereum. There's some people that like only stack Bitcoin and that's all they'll touch. And I mean, there's definitely a strategy there. Absolutely. If you want probably the crypto that's going to get the most adoption out of anything, yeah, I mean, I think Bitcoin's going to get a lot. Will there be other assets that are small market caps, meaning there's not as much capital in them, that will have bigger growth from where they are now? Yeah, because Bitcoin's had a big long run since 2009, right? So that's just kind of what we're looking at as far as the ETH price action. So let's go look at Chainlink. Chainlink's at a really good point right now. So you can kind of see since, again, that June low, kind of that max fear in the market. June was when they were saying, okay, Coinbase might be bankrupt. That's when Coinbase kind of bottomed. There was a lot of different fear right around June. It's actually pretty cool. I think if you go to Google Trends as well, and you just type in recession or stock market crash, and you look at those Google Trends, bam, June was like the peak. That's when like everyone was like searching that and freaking out, right? So if you want a good kind of like sense for like how people are thinking, go look at Google Trends and kind of look for things like that. So, but anyway, we've been going sideways for basically a whole year, right? So that's really good to me. And knowing what I know now, I can see this is a really great pattern. So this is kind of the 4 stages of a market cycle. And as you guys go deeper within your financial journey, you'll kind of learn stuff like this, right? So look at some of those channels that I've been throwing out. I've learned everything I know from them, from watching them, as much as I do. But basically, here is the 4 stages. So it's accumulation. It's going sideways as people are accumulating it. It doesn't have enough steam to really pick up in price, but eventually it does. Eventually it breaks out. Then it goes to the markup phase. Then it goes to distribution. So distribution is now it's kind of peaking. There's still some people buying, but there's big money selling, right? Big money selling. Enough people are buying to kind of keep it floating up there. And then eventually the buyers run out and it drifts down. So then it goes to markdown. What do we see here? We see accumulation. If we go right here, this is accumulation. This is mark up. This is distribution. And then this is marked down. And now we're back in accumulation, right? So we're back in that 4 stages of the market cycle. So for me, I see this and I go, okay, great. This is a super good low risk entry from where it's at right now, based on just kind of how markets work. And we know that liquidity is already getting better. We know that interest rates are going to get better from where they're at now, because eventually really negative data will start coming out as far as like unemployment and different, markers in the economy. That will happen, and that's going to fuel, rates to come down. So yeah, we're actually at a really good point. We're probably going to bounce from this level. So a couple different indicators if you guys want to get on it. I've got this on my YouTube, how I set up my charts and how I look at them. This is definitely something you're going to want to look into. So if you're looking at weekly RSI, so weekly means each candle is a week in time, and you see the RSI, the purple line at the very, very bottom, that's a super good indicator of, hey, another low risk entry, right? And obviously what happened from that time point, if you wanted to even take a little bit of profit, I mean, you had a 46% run from that point to where it popped up, right? So from the point of this bottoming, the RSI, which means strength index, okay, relative strength index, then it kind of popped up from there. So you can kind of see we're about to kind of hit this bottom again. This is kind of the final flush, the way I see it in the crypto market. So you can see Chainlink, Solana, Matic, a lot of them, what was it, Friday last week, got hit pretty hard. So a lot of them dropped like 25%. So yeah, you got to be aware of the volatility, especially in crypto. In any financial market, you got to be aware of the volatility, but it's more so in crypto. It's like a little bucking bronco, right? So that's why you want to be very diligent about the way you enter things. Don't put emotion into it, and stick to the game plan of, okay, I'm entering this amount of money here based on what I'm seeing, right? So eventually when you guys kind of study this, you can kind of get to that point, but maybe for now, find someone on YouTube that shows good TA, technical analysis, and you can kind of figure out where the points are at. So, or again, you can go to my YouTube and I kind of walk you through how these charts work. All right, so Algorand is at a super duper low price right now. If you look at it, we're basically the same price we were in 2020, right? So, and this thing had a huge run up. So from where it's at now, if you would have bought it in 2020, you could have been at a 24x, so 24, timesing your money. So we're at like 10 cents right now, 11 cents. So when everything, took a big hit at 25% down, I bought a bunch. Okay, I bought a bunch of Link, bought a bunch of Algorand, some ETH. ETH and Bitcoin held pretty good, but a lot of the altcoins got hit. So the altcoins will struggle, I think, this year. Bitcoin and ETH will kind of flutter up, and then 2024 things are going to really, really pick up. That's when you're going to see everyone and their mom rush in again, okay? Because things are moving, and they don't look at this stuff and see them on a chart. They don't realize that they were just waiting to buy higher. Okay, that's exactly what they're doing. They're just waiting to buy higher. So don't be that person, right? Don't FOMO in next year in 25. Be smart. Put a little bit of capital in that. If you want the lowest risk asset, buy Bitcoin. If you want the least, or slightly more risk compared to that, buy ETH. So just be diligent with your sizing, right? So maybe you do 50% Bitcoin, 20% ETH, 25%, and then the other 25% of what you have, put it into various different altcoins. Okay. So that's kind of how I would structure it. So, and to be honest, I taught my COVID hobby was trading. So some people took up gardening, or some people did, TikTok dancing. I got into trading. So over the course of that time, I've gotten really deep into it, and I feel very comfortable having a plan built around what I do. So, but position size is very, very important. And, I would say how risky an asset is, you size it accordingly, right? If it's more risky, you want to, make your position size less risky, right? So a lot of people get burned because they go all crazy all at once, or they don't know where we're at in the monetary cycle. Okay, so the monetary cycle is just all the credit cycles, right? Is credit coming in or is credit coming out? Okay, I've got a coworker, he bought Coinbase like at the very, very top when it was at like 400. It's at like $50 now, and now he's never going to touch it again, right? He could be buying more now and offsetting that whole issue, but now he's going to wait until it's like back at 4, and then when it goes to 450, then he'll buy more. Okay, so just be diligent about that. Okay, know your own psychology, know human psychology. That's where people get hurt in trading. So and then let's look at another one. So Gala Games. So yeah, so January, everything saw a big spike in January. I kind of covered the reason why a little bit last time, but just to recap, there's something called the January effect. Doesn't happen every single time, but it does happen. So tax loss selling, basically to offset gains, you can sell things that are already at a loss and then just rebuy them the next year, because that's when you report your taxes, right? Is on a yearly basis. So there was a lot of selling pressure. You go look at Tesla. It was down at 100. Now it's at 250. And so that's why everything just popped like crazy, because selling was super heavy. As soon as the new tax year started, there was no sellers. There was just buyers. And that's why things spiked up a bunch, right? So it's called the January effect. For a lot, I know last, like, what was it? Gosh, I think it was like February, maybe. I think we covered just the financial markets, and a lot of people were wondering why that happened. So, but yeah, so Gala Games. So this is more of a crypto that focuses on gaming. There's definitely a lot of like big venture capitalists and very interested investors for crypto gaming. The reason being is because those communities will really benefit from things like NFTs. Like I'm not a big gamer myself, but let's say you've got like World of Warcraft and, different like swords and little weapons or armor could be NFTs, right? Well, now you can buy those NFTs because it is a feature in the game. And so it brings a monetary like value into the game. And so Gala Games is like, I think partnered with The Rock, a bunch of different kind of figures and things like that. So I definitely think Gala Games is going to do really good. It's at like 2 cents. So I think I got lucky and caught it down here at a penny, and it shot up to like 6 cents. Now it's like almost all the way back down, right? So I think it's going to bottom from here, and definitely start to turn upward. So at its crazy peak, it was all the way up to like 73 cents. So pretty wild, right? But that was because we injected so much money into the economy. That's why everything in assets just went crazy. So that's kind of a quick rundown, right? As much as I can kind of squeeze in our hour here. So if you are still kind of like, I don't know, is it going to catch on? I'm not really sure about it, but I'm very interested about it. This is what I'd recommend. Okay, I've got this credit card. So Gemini is an exchange. You can use their credit card to get crypto rewards, right? So just like you would get rewards or cash back with Bank of America, Wells Fargo, whoever, you can get I think it's like 1% on most purchases, 2% on groceries, and then 3% on eating out. If you use my link right here that I've posted, you can get 15% or sorry, $15 of Bitcoin if you use the link. The big reward is you get 10% on gas, which is huge. So that is quite a lot back, which is cool. And then it goes right into their trading account that you basically hold and make. So every purchase you're constantly accumulating. So it's obviously not a lot, but it's, it's cool, and it's definitely going to do way better in the next 2 years than just regular rewards, right? So in my opinion. So yeah, if you're super leery about, getting into the space and you want like the least risky thing to do, you're not going to get great returns on a few $100, but at least a few $100, could go to 1,000, 2,000, something like that. So when we get deep into the bull run, right? So know that this is all recorded if you guys ever want to go back. Know that I mentioned on my YouTube, for all 60 people I have subscribed. Let's see here. So where are we at? Where do I cover it? Okay, there we go. Yeah, so this one right here, I cover, basically generally how to look at TA. There's a few different indicators that I found now since then that are really, really powerful. I should really do a part 2 video. But this kind of goes over the really kind of crazy looking indicator there with the blue and red called market cipher. And then generally RSI is very, very common indicator that a lot of different people look at. So definitely encourage you to go look at this and learn a little bit of TA. So a lot of people, it's kind of interesting. I don't know. The charts really determine a lot of different things. They're never 100%, but it's way, way more probable than anything else. I mean, if you you can forget about following the news, forget about following any of that stuff by just learning the charts and seeing where it's at in its price action. So even if you go look at Twitter, right when Elon bought Twitter and it had a huge spike, it was already uptrending right before Elon bought it, right? So for it to be going the complete opposite way and then spike, it wouldn't do that. So it's a little ironic on when news is released because it follows the price action perfectly. But I think it fools the public a lot to think that that rules and reigns. So cool. All right. Any questions on the cold wallet?
From exchange to cool wallet, you're also going to pay more gas fees.
Well, so gas fees, you're talking about Ethereum. So Ethereum has gas fees, and that's how it operates to, basically get rewarded for those transactions. So yes, there are certain fees with sending, right? Ethereum has gas fees. Bitcoin has its own fee, and it's confirmed by miners, and miners get that fee. So there are some that, some blockchains that cost more, and there's other blockchains that cost less. So, but yes, you do pay a fee to send transactions. Yeah, any transaction. you're sending from your cold wallet out. If you're, you're receiving crypto from a friend, they paid a small transaction fee. But like I said, things like Algorand, Solana, Filecoin, there's a lot of different blockchains that are like fractions of a penny to send. So. Okay, I know you got one, yeah.
Yeah, so to put your presentation in summary, what you're saying is that 2023 to 2025 would be a markup.
It's good. It's going to be it's going to be a markup phase, right? Because we are right now we're here in June, right? So the Fed paused. Okay, the Fed is not in control, right? The bond market is in control. I've showed this, kind of image a few different times, but I'll pull it up because it's important to know. So you want to do Fed funds versus 2-year treasury. So all the Fed does is they follow what the market signs are telling them. They follow the 2-year bond. That's all they're doing. So if we go back and we look at some of this stuff, you pull up this chart, that is the federal funds rate versus the 2-year bond. They follow exactly what the market is telling you. So because inflation went up so much, a lot of money rushed out of the bond market. Bonds have an inverse kind of teeter-totter mechanism with them. If money leaves bonds, the price of bonds go down, the interest rate goes up. That's exactly what happened, right? The market did all the tightening for the Fed, essentially. They were just following the two. They're just following the 2-year. This is all they do right here. But you can see based on the futures, it's already, showing us that it's going to come down and taper down and rates are going to come back down. We're not going to see mortgage rates back down to like 2.8 or, like 2.6, anything crazy like it was before. Or we may, I don't know. They may go really crazy with, bringing liquidity and saving the market again, potentially. But I can tell you right now that the government debt, private debt, just the amount of debt in the system, when it's not serviced, AKA the payments are not being made, the whole thing will blow up, right? So rates have to come back down because debt is so high with government institutions, companies, like there's so many zombie companies out there, right? Like Uber just basically turned a profit for the first time ever, like, a few quarters ago. DoorDash, same thing, right? There's a lot of different companies out there, like they're not really making money. Sure, they're like floating along, but if you take away the free business loans that they basically get, I'm calling them free because it's very low interest, they wouldn't exist. No way. So because of that, rates will go down to service the debt, to allow the debt to be serviced, because they can't pay the higher interest rates that it's at now. So yes, so we will see the kind of same cycle again. It's, the reason why we've seen that kind of 4-year Bitcoin cycle is because that's how the monetary system is working as of 2008, right? Because they kind of changed the inner workings a little bit to keep it going because the system essentially died back in 2008. Once you go to 0% interest rates, there's no going back. You're going to have to go back down to 0 to keep it going. You're essentially at the floor. So yeah. And credit card debt too. Credit card's another reason why, right? Like Americans are stacking up on credit card debt. There's a big problem with that. So definitely seeing a lot of, like balance transfer offers and 0% credit card offers coming out, which means that, they already know rates are going to go back down, quite low again too. So cool. Yeah, guys. So I'll be here. If you guys have any questions, let me know. I definitely highly recommend getting the Gemini credit card. I think it's a really great thing to have in your wallet. I basically have been using it for the past 2 years. And yeah, like I said, it's just a cool, easy way to accumulate crypto. You can actually choose the asset that you want. I think there's like 20 or 25 different ones you can pick. So you can pick Bitcoin, you can pick Chainlink, you can pick whatever. So you pick Ethereum too? Yeah. Yeah. What's that? No. That means this one? Yeah. Yeah, so these are the dates, right? So in December of 2022, this is what they were predicting for the federal funds rate. In it's kind of hard to tell. So I think this is January, this white line. Then February, this line, 'cause I think we got a really hot CPI reading, so that's why it jumped so much, right? So these are all changing and slightly adjusting with economic data that comes in, right? But you can see now we're at like they're predicting rates lower than what we've been showing the past 6 months. So essentially at the, I would say the last 2 to 3 meetings of the Federal Reserve meeting this year, they're going to be doing cuts. I based on what I'm seeing, they're going to probably pause one more time, and then the last 2 or 3 meetings they're going to be cutting, and all 24 they're going to be cutting rates. So again, they just follow the market, right? They're not. There's nothing mystical about what they do. So if you follow the 2-year Treasury and you can chart that and pull it up and look at it, you can kind of predict and see what they're already going to do. So cool. Yeah. One country that did. Yeah, El Salvador. Yeah, yeah, yeah. Well, I think that governments like having control of their money. El Salvador is trying to be very innovative, and I mean, essentially, I don't want to say they didn't have a choice to go that way, but their country's been in, turmoil and like problems for so long. So it's a really awesome thing that they did that, and they definitely have some people using it across the country. Not as much as maybe could, but there's you can go to El Salvador and use Bitcoin no problem. So from like little fruit vendors on the street and stuff like that. So yeah, so they're obviously a very friendly cryptocurrency nation. Even like friendly states, obviously, or Florida is super friendly with it. That's where they hold the Bitcoin conference every single year. But I, was mentioning before that Vietnam is one of the biggest users of cryptocurrency because their currency is terrible. I think also, gosh, I forget which country in Africa because their currency just hyperinflated. So they're running to something that they can easily get, right? It's like for them, they probably can't get gold and they probably can't get silver. So they can easily go to Bitcoin though if they have phones. So developing nations are the biggest adopters of cryptocurrency right now because their currency is just awful. So I think even in Turkey with the earthquakes, they've been using like Tether, which is basically the US dollar, right? So rather than their currency, the US dollar is much, much better. So yeah, it's getting a lot of adoption. Like we're lucky to be in the US using the US dollar, right? Because we've basically kind of muscled our way around the world and said, hey, you got to use our dollars. So we get the benefit of that monetarily, but other countries don't do so well. Because rates are so high, all these countries owe their debt in US dollars, and that's why their currencies are going out of control. Basically, what's happening is to cover the debt and make the payment, their governments are printing up more money to convert it to dollars to make the payment. And that process is happening over and over and over again. And that's why their currencies are just hyperinflated. So, because we have interest rates high, they're having to do that to make the payment, and it's just compounding. So, but yeah, like I said, guys, you're going to see a lot more adoption. It's literally just getting started, but it is going to be pretty big, and it's going to change a lot. So another guy that I'll drop real quick, Mark Moss. He's got a really great YouTube channel. He's got a really good video on cycles, and I think I've actually got one of the charts that he posts. Let's see. I hope I do because it's really good. I know I've got it on my phone. Ah, dang it. Well, I'm gonna have to just show you guys in person a little bit after we break, but essentially what he shows is there's always these technological cycles that happen. There's all kinds of different other cycles, basically country cycles. 250 years is usually how long a country is really strong for. If you add 250 years to 1776, when the US was founded, brings us to right about 2026. China is going to be the next superpower after us, obviously. But technological cycles are on 50-year cycles. So the automobile, 1920, completely changed the way we live. 1970, telecom and phones completely changed the way we live. And then just past that was the internet. Another 50 years brings you into 2020. Blockchain, crypto, AI, robotics, 3D printing is going to completely change the way we live. So we're on that same like cusp again where society is going to have a massive change. And what he shows that's super cool, he shows that basically the 250-year country political, like not political cycle, but basically that kind of national cycle is at the very, cusp of changing. 80-year political cycles kind of at the very cusp of changing, and then the technology is lining up at the same time. So that's why you're seeing just like so much happening in the world right now. You're seeing the superpower shift from the US to China. You're seeing, big political turmoil. And then obviously you're seeing a disruptive technologies, in the economy. So it's pretty cool. It's really, really fascinating, the stuff that he covers. So, but cool. All right, guys. Well, this is all recorded. If you guys ever want to go back, check it out. But let's go ahead and break and we'll network.